silver is volatile, but there are ways to deal with that. You don't need to shy away from it because it's volatile. And the safest way is, of course, physical silver. Even that can be relatively volatile, but you can use the volatility to your advantage.
StockPulse on location here, the Vancouver Resource Investment Conference 2023, and I've got Peter Krauth, author, Great Silver Bull. Is that what it was, Peter?
That is it.
What a book, too.
Thank you.
And boy, here's a guy who really lives silver, and so I want you to, I guess, break down silver here. Had a pretty decent year, I'd say. It kind of rebounded nicely, but you wrote a book. You tell us about it.
So actually, I was asked at it would be the PDAC and Metals Investor Forum last year in the month of June. Kitco asked me, where's silver going, and when should you buy it? And I said, if the all-in cost is about $18, $19 today, I'd say it's probably closer to 20. But I said, if you see $18, start buying. And that's where we were in October. Today we're nearly at 24. That's like a 33% gain in the last 4 months, 5 months. Not bad.
Yeah. Well, I'll get a little predictive with you here. We're going to have the StockPulse Silver Symposium in October. What are you thinking by then?
By then? Well, I mean, that's very specific time, but I'm going to say the second half of this year, I think that we have a decent chance, especially if, you start to see credit markets suffer, you start to see bonds suffer more. I think that you could see silver push $30 later this year.
So what are some of your biggest indicators moving forward here?
Well, I mean, one of the standard ones, one of the classic ones is the gold-silver ratio. And right now, I mean, I haven't checked recently, but we're probably somewhere around 80, 85, something like that. And any time that we reach 80 and go below, and start to trend below 80, that starts to be a really, really great time to be both in gold and silver. That's indicative of a new rally and potentially, a new start of a bull in both metals, but especially silver, because as the ratio falls, silver gains on gold.
Yeah. What kind of geopolitical risk do you see in our environment here that could ignite things?
That's a big one, but I mean, it's all over the map. It really is. I mean, the war in Ukraine and with Russia is the obvious one, but in terms of geopolitical risk, I think that you've got China that's a wild card. You've got Russia talking to Iran about a gold-backed stable coin so that they can trade with something that's tangible, that's proven, for thousands of years. Then you've got China talking with the Saudis about a petro yuan. So, these things are in play. Are they for tomorrow? Maybe not. But these are the kinds of things we would have never heard about just, 5 or 10 years ago. And so the world is changing very quickly. I think people need to account for all kinds of things they never thought were possible or even likely. And precious metals are a proven way to protect. And it's a great asset to fall back on.
Several ways to play these markets. There's a paper game, there's a stacker game, there's a junior mining game, probably a little bit of all. What advice do you have to investors?
So I would say none of them make the others mutually exclusive. Why limit yourself? And in the book I say that silver is volatile, but there are ways to deal with that. You don't need to shy away from it because it's volatile. And the safest way is, of course, physical silver. Even that can be relatively volatile, but you can use the volatility to your advantage. You can limit position sizes. You can scale in to positions, whether it's physical or stocks, silver stocks. You can scale out when you feel that things have gotten lofty. And I just think that it's a market with so much potential. There's no reason people should not participate. I think even, grandmas and grandpas should participate in the silver market because of the potential and because of the fact that it's just been proven. And again, it's a question of commitment, and you don't have to be all in. There are other things, there are other assets that make sense, but silver, because of its potential, really should be in everyone's portfolio.
Tell investors about your book.
So I wrote the book, published it last year in May. It's called The Great Silver Bull. It's all about how and why you should invest in silver. I talk about the history of silver. I talk about the economic situation, sort of the macro picture, where we are and where I think we're headed. What happened subsequent to the publishing, in terms of, rates started to rise already, but I've been saying, and I say in the book, that I think we're in what I consider at least a decade, the inflation decade. So there's two things I think to remember. One is that inflation is here to stay. In some level, yes, central banks are raising rates, and we've seen that come down a little bit, but I think the best analogy we have is the 1970s. And in the 70s, we had 3 waves of inflation. I think the mistake people are making right now is they think that it looks like the last time, which was the 1980s, and then inflation went away for 4 decades. I don't expect that to happen this time. I think it's pulling back right now, but we're not going to see 2% inflation anymore. 4%, I think, is going to be the new 2%. So that's the big thing. And then the other big thing is scarcity. I think we're going to see that across the commodity space. And so I think people really need to start looking at alternatives. And I think people are looking at alternatives. Younger people, it's shocking to me actually. Young people have come to me and said, your timing with the book is really good. And I'm, what do you mean? And they said, well, people are looking for other things. Stocks and bonds have been terrible. They've been fantastic for 40 years, but nothing lasts. And I think people have to be open to that just what happened last year in what we call the 60-40 portfolio, 60 stocks, 40 bonds, was the worst year in at least 20 years. And these things come in clusters. Big drawdowns in that kind of portfolio come in clusters. We saw it in the 20s and 30s, so 100 years ago. We saw it again in the 70s. And I actually honestly think that this year may actually be quite good for stocks and for bonds, but because they're coming off such a big low from last year. But I wouldn't expect it to last. I think things have changed. A high inflation and a relatively high interest rate environment is not good for stocks or bonds. I would not expect them to do well for probably the next decade.
How do people keep an eye on your work, Peter?
Easiest way is to follow me. I do a silver-focused investment newsletter called Silver Stock Investor. So they can go to silverstockinvestor.com. And I'm also on LinkedIn and on Twitter, Peter Krauth.
There you go. Peter Krauth, Vancouver Resource Investment Conference 23. Appreciate the insights.
It's been my pleasure, Rob. Thank you.